What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. On this channel, we talk about the markets, and we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update, so I want to break down some technicals, going over S&P 500 and the Nasdaq 100, but also breaking down from a technical standpoint for stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And today we had a mixed day in the markets. And when it comes to the S&P 500, we didn't have a turnaround Tuesday because the S&P went down 0.08%. And on average, guys, when the S&P 500 goes down 1% or more on Mondays, the average return on Tuesday, the next day, is 0.56%. So when we say turnaround Tuesday, we have historical data that backs up that saying, that idea of the turnaround Tuesday. However, we didn't see a turnaround Tuesday in the case of the S&P 500. Dow Jones went down 0.15%, Nasdaq went up 0.22%, and the Russell 2000 was the best performing index, going up 0.25%. And when it comes to the sectors that trade inside the S&P, the best performing sector today was the energy sector, and the worst performing sector is the industrial, or was the industrial sector. We are starting to see real bargains, guys, when it comes to the industrials sector, such as Caterpillar. I think that CAT is trading at $195 or $192. In my opinion, that's a very attractive price in order to pick up some shares of CAT. And when it comes to the two most important sectors inside the S&P, the tech sector went up today. It pretty much broke even, guys. The tech sector went up 0.03%. And the financial sector, guys, I think that for the most part, the S&P had a negative day today because of the financial sector. At some point today, the financial sector was up almost 1%, and it ended up closing today's trading session in negative territory, down 0.11%. So the markets were pretty much, guys, thinking about what is going to happen tomorrow with the Federal Reserve. Remember that tomorrow we have the Federal Open Market Committee. So at 1 p.m. Eastern Standard Time, we are going to have the Fed's decision regarding the interest rates. We already know that they are not going to announce any change whatsoever. However, at 2 p.m. Eastern Standard Time, Mr. Jerome Powell is going to be holding a press conference, and some people say that he's very likely to announce the beginning of the tapering process. Some other people say that he isn't going to announce anything tapering related. And in my case, guys, and since we got a way worse than expected jobs report, and since the Delta variant is still, creating some sort of difficult situation here and there, today we actually had the CEO of Disney saying that they are dealing with some difficulties because of the Delta variant. So I think, guys, that we are not going to hear about tapering tomorrow, or maybe the Federal Reserve, or the chairman of the Federal Reserve can say like, okay, guys, we are starting out the tapering process maybe in November, maybe in December, or maybe he won't set a date at all. So who knows what can happen tomorrow, but obviously that is going to be a big market mover in tomorrow's trading session. And now let's go ahead and take a look at the S&P 500 that, as I just said, it went down today 0.08%, and it closed today's trading session at 4,354 points. So I am going to zoom in here on the 4-hour chart, and guys, we closed slightly below a very important area that I pointed out in yesterday's video at 4360. 4360 is a previous area of support that already acted as such for the S&P. back in July 22nd, but we are also talking about a former area of overhead resistance in which the bulls of the S&P failed on 2 occasions back in the beginning of July. So that is going to be a very important spot tomorrow if we happen to see a lot of volatility in the markets, and if we happen to see a leg down, then the main area of support tomorrow is going to be 43.28. 43.28 is a previous area of lower support that already acted as such for the S&P back on July 21st, and it also acted as lower support back on July 9. And if the bears happen to be able to take on or to break to the downside this area of lower support, then obviously, guys, 4,300 is going to be the next important area of lower support in the S&P 500. If we happen to see a leg higher tomorrow, which looks unlikely, guys, because I don't think that the markets are going to pull up waiting for the Federal Reserve. Maybe after the press conference at 2 p.m., and if the chairman of the Federal Reserve doesn't say anything tapering related, then maybe we could see a leg higher in the S&P. And if that were to happen, then we need to keep a close watch on 43.95, which is going to be the next important area of overhead resistance for the bulls of the S&P. We are talking about a former area of overhead resistance in which the bulls of the S&P failed on 2 occasions back in mid-July. If we take a look at the relative strength index, the RSI of the S&P 500, it is at 29 points. So the S&P is still in oversold territory, and I think, guys, that the best outcome for the bears in the upcoming days would be letting the bulls of the S&P 500 take on 43.96, and let's say that the S&P 500 starts trading above, let's say 4,400 for a few days. So that is going to let the RSI of the S&P go higher. Let's say that maybe the relative strength index of the S&P goes up to 45, 50 points-ish. So if that were to happen, guys, it is going to be more likely for the bears to take the S&P 500 way lower. But with the relative strength index being at 29 points, we cannot go way lower relative to the spot in which we are as of now. Because whenever the S&P 500 or whenever the relative strength index of the S&P gets down to 19 points or 15 points, we are going to have a lot of people buying the dip, and we are going to have a lot of algorithms being triggered by a very low relative strength index of the S&P 500. And in the case of the Nasdaq 100, I think that the NDX went up a bit today. It went up a bit today, so yeah, it went up 0.10%, and it closed today's trading session at 15,027 points. And if we take a look at the relative strength index of the NDX, it is at 30 points, so the Nasdaq 100 is yet in oversold territory. So in terms of overhead resistance, guys, the most important area for the bulls, and this is a spot in which they fell today, is going to be 15,150 points. 15,150 points is a previous area of support and resistance in which the bulls of the NDX failed today, and they also failed yesterday. So we are talking about a former area of support that already acted as such for the NDX back on August 23rd. And we are also talking about a former area of overhead resistance in which the bulls of the NDX failed on 1, 2, 3, 4, 5, 6, and 7 occasions before. In psychological terms, guys, we need to keep a close watch on, and I am going to draw a line over here, 15,000 points, guys. This is an important spot because we are talking about a fat number, and on top of that, 15,000 points is also a previous area of support that acted as such for the Nasdaq 100 back on August 11, and it also did it back on August 10. So the most important task for the bears of the NDX tomorrow is going to be taking on 15,000 points and maybe take the Nasdaq 100 down to 14,800 points. 14,800 points is a previous area of lower support that already acted as such for the NDX back on August 19. It also did it back on July 27, but we are also talking about a former area of overhead resistance in which the bulls of the NDX felt back on July 6. And take a look, and this is something that I need to give to the bears. They managed, guys, to avoid the bulls of the Nasdaq 100, or they managed to prevent the bulls of the NDX closing above today the 180 SMA on the 4-hour chart. That would have been bullish price action despite the horrible downtrend that we are seeing here on the 4-hour chart. So that was positive for the bears, and obviously that was negative for the bulls. And now let's go ahead and take a look at the first stock of this video, AMC Entertainment. And in the case of AMC, guys, I don't know if the bulls actually managed to close either above or below the 180 SMA. So they closed at $38.88. So that implies that this golden cross that unfolded back on August 26th is invalidated. Some technical traders would say that for this golden cross to be effectively invalidated, then the bulls would need to close tomorrow's trading session below this 180 SMA. But in my case, guys, I would say that this golden cross got invalidated today because the bulls didn't manage to close above that 180 SMA. So the most important task as of now for the bulls of AMC would be starting to consolidate slightly above a very important area of support, of previous support at $38. $38 is a previous area of lower support that acted as such on 2 occasions back in the beginning of June, but we are also talking about a former area of overhead resistance in which the bulls of AMC felt back on August 18, and they also felt back on August 10. So if the bulls start to gather momentum slightly above $38, that could be a positive sign, guys, because that would imply that they could be able to potentially take on the next 2 important areas of overhead resistances for AMC. The first one at $42.50 each, which happens to be a previous area of lower support that acted as such on 2 occasions back in the beginning of September. But we are also talking about a former area of support that acted as such on 2 occasions also back in the beginning of June. So we are in front of, or we are talking about a former area of support that was broken to the downside and that now is going to act as a new resistance. And once the bulls of AMC happen to be able to take on $42, then the other important area, or the next important area of overhead resistance, is going to be at $46, which happens to be a previous area of support that acted as such on 2 occasions in recent days. But we are also talking about a former area of overhead resistance in which the bulls of AMC felt back on August 30th, and they also felt back on July 21st. So watch out for AMC, guys. I think that a process of consolidation is very likely to happen slightly above $38. And take a look at the relative strength index of AMC, guys. 27 points, so AMC is in oversold territory. So if a consolidation process happens to unfold slightly above $38, I think that the task of taking on $42 and then $46 could happen sooner rather than later. And now let's go ahead and take a look at Disney, which got absolutely killed in today's trading session. So Disney went down today 4.17%, and it closed today's trading session at $171.17. So what gave rise to this horrible drop that we saw today in the case of Disney, guys? So let me pull up here the live news tab, and the CEO of Disney was holding a press conference at Goldman Sachs, and he made some comments. So here it is. Bob Chapek is the name of this guy. He warned that the Delta variant fueled wave of COVID-19 is impacting movie and TV production and will delay releases in the coming months. The pandemic-related suspension of the Indian Premier League cricket season last spring also means less sports content on Disney's streaming services in India over the summer. And Chapek said that the launch of a Star Plus in Latin America in recent months had proceeded more slowly than expected. And I think that he also lowered guidance, guys, when it comes to the subs of Disney Plus. So let me see over here. So he says low single-digit million subscribers in the current quarter, which is Disney's fiscal's fourth. Chapek said Wall Street analysts' average estimate had been for 17 million additional Disney Plus subscribers in the period, according to FactSet. So this is serious business, guys. So the CEO of Disney is seeing low single-digit million growth when it comes to the subs of Disney Plus, whereas Wall Street and most analysts out there were expecting Disney to increase its subs for Q4 of this year at around 17 million additional subscribers. So this is bad news, guys, for Disney. So we gotta be careful over here because Disney, as of now, looks like a falling knife. So I need to see some sort of consolidation slightly above $172, guys. $172 is a previous area of lower support that already acted as such for Disney back on August 19. It also did it back on August 5th, also back on July 20th, and lastly back on June 18. And we are also talking about a former area of overhead resistance that acted as such back on January 28th. So this is a very interesting spot in order to pick up some shares of Disney. But since we are kind of seeing a corrective process of the markets, guys, we need to be very careful because we really got bad news when it comes to Disney. The relative strength index is very low. It is at 22 points. So we can make the case that Disney is likely to hold $172 as lower support. So if I happen to confirm from a technical standpoint that Disney found a good support at $172, I might be interested in picking up 30 or 40 shares of Disney, in which case my price target is going to be the next important area of overhead resistance at $180. $180 is a previous area of overhead resistance in which the bulls of Disney felt back on July 29, and they also felt back on May 28th, and we are also talking about a former area of lower support that acted as such back in late March, and it also did it back in mid-February. So if we were able to take this trade the way that I am describing it, picking up some shares of Disney slightly above $172 and selling out of those shares at $180, we could be making a profit of almost 5%. That would be a very solid profit. But mind you, guys, if Disney happens to break this support of $172 to the downside, then we might see $167, a previous area of support that acted as such back in mid-May. And if that area of support happens to be broken to the downside, if we happen to see a deeper correction of the markets, what about Disney paying a visit down to $160? So we have to be very careful with Disney, and we need to confirm that $172 is providing a good support before starting any position on Disney. And now let's go ahead and take a look at the third stock of this video, Sklz. And guys, can you believe this 4-hour chart, of Sklz? My goodness, God almighty, the stock of this company has gotten absolutely killed. Sklz hit all-time high back in early February at $46, and as of now, the stock of this company is trading at $10.56. cents. So we can say that Sklz is trading 78% of its highs. Wow. Talking about a nice discount from all-time high. Because in terms of multiples, this is still an expensive stock at $10.47. So Sklz went up today 1.005%, and it closed today's trading session at $10.56. And guys, I am having difficulties because I have a sore in my mouth, so it hurts a lot, and I am making a great effort in order to record my videos today. So in the case of Sklz, guys, let me zoom in here. The 4-hour chart, despite the pain that I have in my mouth. So I think, guys, that despite the fact that the stock of this company looks horrible from a technical standpoint, if I happen to confirm tomorrow or in the course of this week that $10.20 is providing a good support for the stock of this company, I might be interested, guys, in picking up 300 or 400 shares of Sklz. $10.20 is a previous area of lower support that already acted as such for Sklz back on August 19. And mind you, guys, we could make the case that maybe in the course of this week or maybe in the course of next week, maybe this 50 SMA on the 4-hour chart would be able to potentially cross above the 180 SMA. That would be a golden cross, and that would be a bullish sign that would be signaling that Sklz might be able to reverse this horrible downtrend that we are seeing on the 4-hour chart. So if I happen to pick up some shares of Sklz at, let's say, $10.20, $10.30, then my price target is going to be, this is going to be a trade that I am going to be very patient with. So my price target is going to be the next very important area of overhead resistance for Sklz at $13.88. $13.88 is a previous area of overhead resistance in which the stock of this company felt back on September 1st, but we are also talking about a former area of lower support that acted as such on 3 occasions throughout July. If I were able to take this trade the way that I am describing it, as I just said, picking up some shares at $10.20 each and selling out of those shares at $13.50 or $14, I could be making a 25% profit. So no doubt about it, guys. I think that out of all of the stocks that I am breaking down in this video, this is going to be the one that is going to be at the very top of my personal watch list tomorrow. And the last stock of this video is going to be another stock that got absolutely killed today, guys. DraftKings. So DraftKings went down today 7.42%, and it closed today's trading session at $52.77. And in the case of DraftKings, we got news because this company wants to buy out, guys, an online gambling company that is based in the United Kingdom. Let me see, which name is Entains. So, and this deal hasn't been confirmed, by the way. So let me pull up here the live news tab, and I cannot read this news because I cannot move my screen. So let me see. Okay, DraftKings shares slip on bid for United Kingdom's Entains. So let me see. Okay, so shares of DraftKings fell nearly 7% on Tuesday after the digital sports betting and entertainment company made a bid reportedly worth $20 billion for Entain PLC. UK-based Entain confirmed it had received a cash and stock offer from DraftKings, but didn't provide any further financial details. And that was this morning, guys. And later on today, we got news that this company is thinking about DraftKings proposal. So let me see. Entain PLC said Tuesday that it has received a takeover proposal from DraftKings, but cautioned that there is no certainty any deal will be struck. So I don't know. So let's see what happens with this deal. In my case, I didn't want to purchase any shares of DraftKings today, and I am going to be patient, guys. I am going to be waiting for $51. $51 is a previous area of lower support that already acted as such for DraftKings back on August 17, and we are also talking about a former area of lower support that also acted as such for DraftKings back on January 20th. And we are also talking about a former area of overhead resistance in which the bulls of DraftKings failed back on July 29, and they also failed back on May 28th. So that is going to be my entry price for DraftKings. As of now, the stock of this company is trading at 52 bucks. The relative strength index, the RSI, is very but very low on the 4-hour share. So we can make the case, guys, that if tomorrow the stock of this company happens to pay a visit down to $51 or $50.50, the relative strength index is going to be even lower, and that is going to increase the likelihood for the bulls of DraftKings to find support at a previous area of support and resistance and then bounce back up. If I happen to start the trade on DraftKings near $51, as I just said, or $50.50, then my price target is going to be the next important area of overhead resistance for DraftKings near $56. $56 is a previous area of overhead resistance in which the bulls of DraftKings failed back on June 9, and they also failed on 2 occasions back in January, and we are also talking about a former area of lower support that acted as such back in late April. So if I were able to take this trade the way that I am describing it, picking up some shares near $51 and selling out of those shares at $56-ish, I could be making a 9% profit. That would be a very solid profit. So watch out for DraftKings, guys, either tomorrow or maybe on Thursday, paying a visit down to $51, finding a good support over there, and then bouncing back up. And needless to say, guys, if the Federal Reserve tomorrow happens to announce the beginning of the tapering process, the stock of this company is going to take a hit for sure, because this is a stock that trades on higher multiples, and we can expect most of the higher multiple stocks to be affected if the tapering process happens to be, the beginning of the tapering process happens to be announced tomorrow by Mr. Jerome Powell. And with DraftKings, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember, this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do it in English and Spanish as well, despite the fact that today I have a sore in my mouth. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.